So in our last video, I was explaining to you that how in classifying step, in the process of classifying, how we merge together the activities which are of similar nature, like the payable items, like I have to pay to A Limited, B Limited and C Limited different amounts, but I will merge in one account, that is, I will merge them and show in one account, that is accounts payable account, so that I know that I have to pay them. Same way, I have to receive from X Limited 50,000, Y Limited 25,000 and Z Limited 30,000. Then I will merge them in one account, that is account receivable. I have to receive from them, so I will merge them in. In this way I will classify as accounts payable, I have to pay them. Accounts receivable, I have to receive from them, from XYZ. Accounts payable, I have to pay ABC Limited, A Limited, BC Limited, C Limited, and accounts receivable, I have to receive from X Limited, Y Limited and Z Limited. So this is how we classify. Third is summarizing. Summarizing refers to the process of aggregating and condensing the detailed financial information into a more concise and understandable format. What is the purpose? The purpose is to provide a clear, organized view of the company's financial activities over a period. What is the example? After recording and classifying transactions, the accountant summarizes the data to prepare a trial balance or to compile the figures for financial statements like the income statement, balance sheet and cash flow statements. Now in summarizing, what we do is to add up all the figures, similar figures in one account and summarize them. We already did in classifying, we added up all the figures. It is a time to summarize what we gathered the financial information. We now have the time is to summarize them. So how do we summarize? Summarizing is in the form of income statement, that is statement of statement of profit, which we in international accounting standard it is a statement of profit and loss, statement of financial position, cash flow statement, statement of changes in equity and notes to the accounts. These are all summarized form, and now this is summarizing. This step is summarizing, that whatever we recorded and gathered the information, we now summarize them in one page or in one glance to understand that what is the position of the company, what is its performance. Like income statement shows the performance of the company, balance sheet shows the financial position of the company, a cash flow statement shows the cash position of the company, the liquidity position of the company, how much cash generated during the period. Now it's time to interpret and analyze and examine summarized data. Now it's time to analyze. Now you have to analyze how the company's performance is. You have to assess how the company's performance is from previous years, from same type of companies, comparing its performance with the industry, companies in the industry, same firms in the industry, comparing its performance from last year, comparing its performance from last month. So this is how we analyze the summarized data. Ratio analysis, trend analysis, variance analysis, these analyses are done to know the performance of the company, where it's lacking, where the company is not performing,